Welcome everybody, welcome to my channel, The Financial Trader's Mindset. In this video, we're going to talk about how you can get wildly rich trading the stock market. Now, it's not what you think. And this probably applies to 99% of the people out there. Most of you shouldn't be day trading. Most of you shouldn't be speculating. Most of you shouldn't even be trading options. So I'm going to tell you the safest way to do it. I think it goes without saying, to do the standard invest in the S&P 500, dollar cost average, you should already have a long term for that, right? But I'm talking for those that have the long term and are looking to get a little bit extra out of the market, or maybe a lot more extra out of the market. So let's talk about that today. And it's going to require not a lot of risk. You're not going to take a lot of risk doing this. Let's get started here. So we got a market crash. What do most people do during a crash? Obviously, they're selling, right? That's why the prices are going lower. The majority are selling. Scared, fear, right? You have to train your mind to think differently. It's very tough, especially for newer investors. But over time, you will see these cycles play over and over again. For instance, have you ever bought something? You bought a stock. It goes down in value. It draws down. It seems like the dip just keeps on dipping and you end up selling. Is usually your highest pain points where you're just like, you know what, just get me out of this thing. I cannot stand it anymore. Get me out of this stock at any price I can get. And you literally just market order sell, only to realize that was the bottom. It finally goes up and you would have been a profit had you held. It's happened countless times to people. It's happened to me, right? That's the mindset shift that you need to have when investing. So first of all, how do you get over the fear? What can you do to control that fear? First, you need conviction. Conviction in your investments. How do you develop that conviction? Well, that's the beauty about investing and trading. Anything can create that conviction, but you have to find out what that is, whether it's the fundamentals of the asset, right? Let's take Bitcoin, for example. You truly believe in the asset. You think it is a store of value, and you have unwavering conviction in that. As long as your fundamental thesis on the asset doesn't change, when price goes down in value, you have to train your mind to see that as an opportunity. When markets go up in value and you feel things are a little euphoric, maybe pay yourself some profit. Take some off the table. Leave some for the ride. You're paying yourself for that risk. So you need to have conviction in the asset, because if you don't, any drawdown in value will just get you to capitulate and sell out. Conviction is very important, and it really has to come from within. You ever seen the movie Inception? They have to plant the idea in the guy's head. They can't just tell him the idea. They have to go into his mind and plant the seed and make him think he came up with the idea. Same concept here. The idea has to come from within. So that goes hand in hand with not following other people's trades. Because that person, that trader, could have conviction in his thesis on that trade. But if you're just following, say you get in, market goes down in value, you have no conviction to keep you in that trade. You're just like, oh my God, this thing is not working. It's going down. And then eventually, if it keeps going down, that dip keeps on dipping, you get wiped out, stop out, and then you're hating life. And you're like, you know what? Trading's a scam. I'm done. Never investing again. That's how a lot of people think. But the markets can create tons of wealth. I've seen it, especially during 2008, when the housing market was crashing and the whole market was crashing. I just started getting into the market. I didn't know what the stock market was actually at the time, but people older than me were telling me to buy. And I remember there was one guy, every week, he would come up to me, and this was when I was working a job in corporate. He would come to me every week and say, hey, did you buy? I'm like, no, man, the market looks like it's crashing. I saw that fear as a reason not to be in the market. I just bought more today. Every week, I bought more. A couple years later, guy retired, and he was like, dude, I don't have to work ever again. And I was like, wow, that's amazing. When the market crashes, that's when the best opportunities come. Usually, we tend to want to buy in when the markets are elevated, prices are going up, everybody's excited. That's when you feel like, you know what, I got to join this. This thing looks amazing. It looks like a great opportunity. But during those times when prices are elevated, that is the worst risk to reward. The best risk to reward is when markets are crashing. That's when you look for quality assets that you have conviction in to accumulate, whether it's to start a new position or accumulate more. So then where do you get rich in all this? Where do you build that wealth? It really is simple. After you do the first part, the hardest part, buying with conviction during the best risk to reward ratio, when that opportunity is so asymmetric that you just see it as what is a no-brainer to buy here. That type of conviction, and you go in heavy. Yes, you have to go in heavy. That's when you make the most money. When everybody's fleeing for the hills, everybody's dumping their stock, and you're sitting there picking up the pieces. Now, you may not see that return for quite some time, but we V-shaped recovered to new all-time highs. When that market was crashing, I was loading up on Bitcoin below 80K, loading up on Ethereum at $1,400, loading up on the S&P 500, loading up on quality assets. There are times when you question yourself and you're like, oh my God, is this thing going to come back up? And what am I doing buying right now? You seem like a crazy person. When people look at you crazy for buying, you know you're on the right track. Just make sure they're quality assets, right? Assets that will be around for a long time. Not your shit coins, not your altcoins, not your small cap stocks. Talking about quality, large caps. Buy the index, whatever you want, right? But it has to be quality. Then the next stage happens, the waiting. This is the hardest part. You thought having conviction when things are falling apart and it seems like there's a fire and there's a nuclear Armageddon going on in the markets? No, that's not the hardest part. The hardest is the waiting. Waiting for those returns to come. It could be weeks, it could be months, it could be even years before you see a return. That is the hardest part. And in the current environment of instant gratification where people want to see returns tomorrow or see returns yesterday, they don't want to wait. You will have an advantage over that simply because you got to have a long time horizon. That's why I'm saying don't buy options, buy the asset, buy the stock, buy the actual asset and just hold. Another thing, avoid leverage. Unless you know what you're doing, avoid it. Avoid margin, avoid leverage. That will get you in trouble. If you go into leverage as the market is falling and you're buying the asset on margin, you don't know how far it's going to drop. Nobody knows. I don't care how much technical analysis you do. All it takes is one big sell order to keep that market dumping. It'll break through your trend lines, your Fibonacci's, what have you. Whatever indicator you use, it's not going to stop and save your money. You control what you can control. You control your position size. You control your risk. If you risk on quality assets with no margin, no leverage, you have the upper hand from the get-go. You put time on your side. You leverage that time to bring those returns. So how long will it take? Who knows? It could take a couple months, a couple years, 10 years. Who knows, right? Nobody knows. So what do you do in the meantime? You just wait. You may have that shiny object syndrome where you're like, oh my God, that's running. This thing is not doing anything since I bought it. Let me sell it and go over to that real quick and then come back. The problem with that is that most times you will sell, jump into that shiny object. Worst case, you end up losing on that opportunity. 10, 20, 50% of your investment into it at the original asset that you had conviction on goes up in value. Now it's higher. I'll wait till it comes back down, and it never does. And it goes up forever. And you miss your entry and you miss that opportunity. The less you fiddle with it, the better. It's like that micromanager at work that's constantly pestering you, wondering what you're doing, trying to find an update every single minute of the day. And you're just like, just get away from me. I can't even perform because you're on my ass. That's what you are to your portfolio when you constantly fiddle with it and try to fine tune it. It's important to have a plan. And over time, you will make a lot of money. Get better, make more money, invest more over time. That's the idea. You got to change that mindset. Stop fucking with the 0 DTE options. Stop messing with shit coins and altcoins. Invest in quality and keep investing. Buy the dips. Buy the fear. Things get euphoric. Pay yourself. But overall, keep exposure to the market over time. And over time, you will build that wealth. You will never, during euphoric times, feel that FOMO of, man, I wish I was in, because you're already in. And when the market's dumping, you're like, okay, I got some extra cash on the side. Let me drop some in there. You will build that wealth. And eventually get to the point where you cover your essential expenses and you can have your financial freedom. Doesn't mean you have to quit your job. Doesn't mean you have to retire, right? But you'll have that edge over everyone else. Most people live paycheck to paycheck. They're afraid to speak up at work, to give their opinion, because they don't want to piss anyone off and lose their job. You, when you achieve that financial freedom, it's like a superpower. You don't care. And especially if you think your idea is for the greater good of the company, greater good for your business, whatever it is, right? You're willing to take more risks. And when you take risk in life, eventually you'll hit it, and you'll hit big. I will see you guys in the next one. Peace out.